Hi, Mitch Argon here with Calneva Realty. Welcome back. We're going to do a market update for June of 2024. Let's get started. Okay, let's jump in. Like in prior months, we'll start off with median price. As you can see, median price is up across the board here, with the exception of Tahoe, which fluctuates quite a bit because of low transaction volume. Some of these numbers are quite high, like Carson Valley at 33%. That's really not a steady state indication. All of our markets here are probably running, for the most part, horizontal or flat with modest increases, which you'll see in just a moment. And this is a visual look here at pricing. So we had this dip in the last half of 2022 once the interest rates started to rise, and that effect took place in the marketplace. And since then, if you go back through here, you can see, if you look across these lines here, it's been fairly stable to modestly up. We have not gone back to any peak pricing yet in any of our markets. So we're basically kind of moving horizontally with a little bit of appreciation, as you can see in this chart. Even though the year-over-year shows something a little bit different, we're kind of working through some of these gaps that we had when the market's corrected just a slight period for about 2 quarters. Affordability is a big topic in the current market. Why we have elevated interest rates, not from historical standards, but elevated interest rates from where they were at the 3% range just a short number of years ago. And we have elevated prices, which largely was a function of what happened during the COVID pandemic. So last month, for a 80% loan, conventional, high, well-qualified borrower, 20% down, the Reno median price was $625, which is just a little bit off of that $635, which is the high here back in June of 2022. And the payment for that loan, just for the principal and interest, was $3,347. So a little bit of a spike upward in the affordability. As you can see, it's been moving around. There's only 2 ways this becomes more affordable. One is prices go down, or 2 is rates go down. So I thought what was important to note here was I went back and did a quick calculation. This $3,347 is almost 2.5 times what the payment was back in March, April of 2020. So it's been a little over 4 years. The payment is 2.5 times what it was then. Surprisingly, the markets have withheld their pricing. So that's been kind of the theme we've discussed for the last several episodes here, several months. And that is pretty much what we see today, although we may see some new trends starting, which I'll talk about here in just a moment. Homes sold, we have been a little bit higher from last year in general, but you can see it's a bit of a mixed bag. You can see some markets are up, some markets are down on a percentage basis. It's important when you look at these percentages as well that you look at the absolute numbers, because some of these markets are not very large. In particular, like Tahoe is the smallest, 60% up. That's only three homes. So, but we are seeing home sales a little bit stronger than they were a year ago, and it's a little bit of a mixed bag, as you see in here as well. Month supply of inventory, which really tells us if we're in a buyer market or a seller market, technically, is moving up. You can see that these markets are, for the most part, moving up in double digits. Still low, however. You can see even at the June 2024 numbers, we're all in the 2s, with the exception of Tahoe, which doesn't, the month supply of inventory doesn't really affect the Tahoe market quite as much. It's very different characteristics. So these markets are all still strong in seller market territory, but moving up. And the reason we're seeing them move up is we're starting to see a little bit of inventory build, which I'll touch on here in just a moment. So when we take a look at inventory, you can see here we're consistently up from a year ago. And we don't know exactly why this is, but there's some speculation. There's been some national press that's been spotlighting certain markets within the U.S. that were markets that had a lot of activity, a lot of price appreciation during the pandemic. I'm talking about markets in Florida, for example. Austin, Texas is another one that gets touched on quite a bit in the national media as selective markets. And what they're seeing in those markets is they're seeing an inventory rise. And of course, as inventory rises, That gives buyers more options. It gives buyers a little more leverage. And that typically, all things being equal, would lead to moderation of price appreciation or price correction. So that's just something that we're watching. I'm watching these other markets, and we'll be tracking here and reporting on. But you can see here, we are up across the board, with the exception of Tahoe, which is again kind of an anomaly to report on. Seeing some inventory build pretty consistently throughout here. We'll see how that looks in the months to come. Visually, this is what it looks like. Each of these markets that we just saw, now you can see what the trend line looks like. There is seasonality in inventory. You can see it in every one of our markets. It gets a little bit, inventory builds during the summer months, and then it will contract during the winter months through the holidays, and then that cycle repeats. So, but we are seeing this build, and we'll be reporting on that as we go forward. Month supply of inventory, a little bit of seasonality you see here as well. It kind of follows with the inventory. We'll see what happens as time goes on. If these data points here continue to show some rise as we get closer, as we get maybe north of where we've been historically in the low threes for some of these markets, that may say that we're moving more towards a correction in the market in terms of pricing. Too early to tell at this point. Quick summary. As I mentioned, we've got some early indicators. Is it the beginning of a trend? I think it's too early to call, but we are seeing a trace of that here. So while the inventory is growing, pending home sales, which is the homes that are going under contract each week, does remain positive compared to where we were a year ago, and pricing remains stable, as you've seen. So we'll continue to monitor that. Why is this inventory building? Well, people who have been locked in with their mortgage rates are holding on to that mortgage rate, but there are life events that trigger people moving and selling properties, all kinds of life events. And so in some cases, I think that we may just have people who maybe the convenience of holding on has gone on long enough, and they now that they really need to sell versus just would have been nice to sell if they would have done it earlier. So we are seeing this. We think people just don't want to wait any longer, in spite of the elevated interest rates that they may be using when they repurchase, when they sell a home. Buyer demand, and there's been some press on this in the national media as well that I've been tracking. And the consensus there is that, hey, you can have high interest rates and high prices, but you can't have them for a sustained period of time. And so there's a potential, I don't know if it's in fact reality just yet, but there's certainly potential of a plausible case to be made that those buyers who can handle the elevated prices combined with the elevated interest rates, we may run out of those buyers, and so that may reduce some demand in the marketplace just based on sheer affordability. So these are some things that could be factors for this inventory build, and how this may affect, how the buyer demand may be affected by these continued higher rates that we're going to have for the foreseeable future. So just a few thoughts to share with you. I think as time goes on, we'll have a better feel for what's happening locally in our markets, and we'll certainly be reporting on that. So thank you for listening. Thank you for watching. Again, my name's Mitch Argon. I'm broker at Calneva Realty. We have an office in Reno. We have an office in Minden. We've got about 25 agents on our roster who help people every day buying and selling real estate here throughout the region. So if you have a question, post it here in the video below, or reply to an email if you got an email, and we'll have one of our agents or myself follow up with you to help you further. The full report is down below this video. There's a link here on YouTube, and that full report has quite a bit more data than I covered here for each market. So if you're interested in drilling down in a specific market, click on the full report, and there's plenty of data there for you if you're hungry for more information. That's it for this month. Thank you for your time. Have a great day, and we'll probably see you next month. So long.